Hey everyone, and welcome back to TalkTickers. We're going to be doing a deep dive today into Kimberly Clark's Q3 2024 earnings call. We're talking Huggies, Kleenex, and Cottonelle here. It seems like they're really pushing forward with their powering care strategy, focused on innovation, and making their organization more streamlined for growth. But how are they actually doing? We've got strong consumer demand, and they're gaining market share. But we also have some bumps in the road, like retailers changing up their inventory in a kind of tough economic environment. So to help us figure this all out, we've got our financial expert here.
Happy to be here. I always enjoy breaking down these earnings calls.
Okay, so let's start with that big headline number. Kimberly Clark said their net sales were $5 billion for Q3, down 4% from last year. But here's where it gets interesting. Organic sales actually went up by 1%. You're probably thinking, what does organic sales even mean?
Well, it's a super important number because it takes away the impact of things like currency changes and divestitures. It gives us a much clearer picture of how the core business is actually doing. That 1% growth in organic sales tells us that things might not be as bad as that 4% drop makes it seem.
Okay, so let's peel back the layers of that 1% organic sales growth. We see that prices went up by 1%, mostly because of inflation. But then volume and mix stayed the same. So what's the story there?
Well, this is where we got to think about those outside forces that are affecting Kimberly Clark. While people are still buying their products, retailers are adjusting their inventories after stocking up last year. With supply chains getting better and interest rates going up, they're being more careful.
So it's like retailers are pumping the brakes after buying way too much stuff.
Exactly. And then you have Hurricane Helene disrupting shipments from their facilities in the southeast. And we can't forget about those lower private label sales as Kimberly Clark backs away from certain businesses.
Wow, so there's a lot going on behind those flat numbers. But is there anything in there that shows things are actually going well?
Oh, absolutely. Despite these short-term problems, the demand for Kimberly Clark's products is still healthy. In North America, we're seeing strong consumer takeaway, and their value growth is beating the average for the category, and they're even gaining market share. This means people are choosing Kimberly Clark brands even with inflation.
Okay, that's great to hear. Now let's switch gears and talk about their powering care strategy. What are they doing to make sure they keep growing in the future?
They're really focused on three key areas: speeding up innovation, optimizing their margin structure, and making their organization more growth-oriented. Let's start with innovation. They've had some wins with new products like Andrex bath tissue in the UK, Huggies in China, and Kleenex in the US, UK, and Australia.
So they're not just sitting back and relying on their old favorites. They're actively investing in new stuff to keep customers interested.
Exactly. And it's not just about fancy new products. They're also trying to be more efficient with their integrated margin management approach. Think of it like this. They're looking at their whole business, from getting raw materials to putting products on the shelves. And they're finding ways to streamline everything and manage costs better.
So they're making every dollar count.
Exactly. And then there's the changes they're making to their organization. They moved to a new segment structure focused on North America, international personal care, and international family care, and professional. It's like creating more focused teams to really tackle specific markets and what customers need.
Makes sense. Now, you can't talk about Kimberly Clark without talking about how they dominate the U.S. adult care market. They basically created a whole category. And their Depend brand has been super successful.
Definitely. Depend has seen a 9% compound annual growth rate over the last 3 years, which is pretty impressive for such a well-known brand. They're taking over more of the market, and their margins are still good.
It seems like a big part of their success is how they're using digital commerce. They're reaching customers in totally new ways, right?
You got it. They're investing in digital retail partnerships, using data analytics and targeted ad campaigns. They're using AI-powered content and search optimization to get more traffic and sales. Basically, they're using all the tools they can to make sure Depend is the first thing customers see.
And they're also tackling that stigma that comes with adult incontinence, especially among men. Partnering with celebrities like Emmett Smith is a great way to make it more normal and reach more people.
It's a smart move, and it's clearly working.
Okay, so before we jump into all the financial details, what stands out to you so far? What's really catching your eye?
I'm really interested in how Kimberly Clark is dealing with these short-term challenges like inventory changes and supply chain problems while they're still working towards their long-term goals for growth. Their powering care strategy seems to be taking hold, and I'm curious to see how it goes over the next few quarters.
For me, it's the Depend story. They took a category that used to be taboo and turned it into a successful part of their business. That takes guts and a really smart plan. All right, are you ready to dive into their financial performance and what they're expecting for the rest of the year?
Let's do it. Let's crunch some numbers.
Okay, so we just talked about Kimberly Clark's, overall performance and some of their big strategies. Now let's zoom in and take a closer look at their three main business segments: personal care, consumer tissue, and KC Professional. I'm ready to break it all down.
Great. Let's start with personal care. This segment includes a bunch of different products like diapers, feminine care, and adult care. In Q3, personal care sales hit $2.6 billion, which is a 2% drop compared to last year. However, organic sales actually grew by a solid 3%.
So we're seeing that same pattern again. Those outside things like currency changes and selling off parts of the business are affecting those big headline numbers. But the core business is still growing.
Exactly. Now let's look closer at what's driving that 3% organic sales growth. We're seeing price changes, especially in countries with really high inflation, helping with the growth. Plus, there's that positive impact from better product mix. This tells us that people are buying more of those higher priced products, which is good for profits.
Okay, that's good news. So they're raising prices where they can and also selling more of their fancier products.
Yay.
But did they actually sell more units overall? What about volume?
Volume stayed the same for personal care in Q3. Now, this might not seem that great at first, but remember all those things we talked about, retailers adjusting their inventory, the hurricane messing things up, and the lower private label sales. All of those things are playing a role in that flat volume number.
Right, those short-term problems are kind of blurring the picture. But if we look past those things, are there any signs that volume for personal care is going to go up over the long term?
Absolutely. In fact, some of Kimberly Clark's biggest growth markets are showing really good results. For example, China had double-digit volume growth for the third quarter in a row. That's really impressive when you think about all the economic challenges going on in China right now. They also had strong volume growth in other important markets like Australia and Brazil.
So it sounds like being all over the world is helping them balance out some of the weakness they're seeing in certain areas.
Exactly. And if we look at their performance so far this year, they're gaining market share globally in baby and child care, mostly thanks to those huge gains in China. We also see them gaining share in North America, where their market share for diapers and pants is up a whole 70 basis points.
It sounds like their innovation and marketing efforts are really paying off, especially in those key growth categories. Now, how did all of this affect the bottom line? Are those sales gains turning into bigger profits?
Well, in Q3, operating profit for personal care actually went down 4% to $482 million. But don't worry just yet. There's more to the story.
Okay, I'm all ears. What's behind that decline?
A big reason is they're spending more on advertising and other marketing stuff. They're really stepping up their game to build stronger brands and support all those new product launches we talked about.
So they're thinking long term, giving up some profit now to get even bigger growth later.
Exactly. It's a classic investment strategy. And when we look at their profits so far this year, operating profit for personal care is actually up a very healthy 7%.
Okay, that makes me feel a lot better. So all in all, personal care had kind of mixed results in Q3, but it seems like their long-term growth is still on track.
I agree with that. Now, ready to move on to consumer tissue.
Yeah, let's wipe away those personal care numbers and see what's happened with toilet paper, tissues, and paper towels. I'm curious to see how those everyday essentials are performing.
All right, let's dive in. In Q3, consumer tissue sales came in at $1.5 billion. That's a 2% drop compared to last year. And this time, even organic sales declined, down by 1%.
Okay, so that's not the best news. What's going on in this segment?
Well, they hit a few roadblocks in Q3. First, those retailers cutting back on inventory are back to bug 'em. Remember how retailers stocked up last year when supply chains were uncertain? Now they're working through all that extra inventory, and it's hurting Kimberly Clark's sales.
Right, it's like a delayed reaction from last year's supply chain issues.
That's a good way to put it. And on top of that, they're facing tougher comparisons to last year when it comes to pricing. Remember, last year they raised prices temporarily in Western Europe to deal with those crazy high energy costs. Those price increases are gone now, so this year's numbers look worse in comparison.
It's always tough when you're comparing apples to oranges. But even with those challenges, there's got to be some good news in consumer tissue, right? People always need toilet paper and tissues.
Of course. The demand for these products is still strong. For example, volume was flat in Q3, with growth in developed markets being balanced out by those inventory adjustments we talked about in North America. And remember, in this case, flat volume isn't necessarily bad, especially when you consider all the unique problems they're dealing with.
right? It's all about context.
And maybe the most encouraging thing is that they're still gaining market share in some key categories. Andrex in the UK and Kleenex in the US, UK, and Australia are all seeing strong share gains driven by volume.
So even though the overall numbers aren't great, they're holding their own in a competitive market and even getting new customers. What about the bottom line for consumer tissue? How did operating profit do in Q3?
Operating profit for consumer tissue ended up at $265 million, a small 1% drop from last year. Like we saw with personal care, this drop was mainly because of strategic investments, especially in their supply chain and advertising.
So once again, they're putting long-term growth ahead of short-term gains.
Exactly. And if we look at their profit for the whole year so far, operating profit for consumer tissue is actually up an impressive 13%.
Okay, so the long-term profit picture for consumer tissue looks much better than just looking at the Q3 numbers alone might suggest.
Yeah, I think that's fair. They're definitely facing some headwinds, but they're also making smart investments that should set them up for continued success in this super important category.
All right, we've covered personal care and consumer tissue. Let's wrap up this segment overview by checking in on KC Professional, their away-from-home products business. Tell me what's happening over there.
Okay, in Q3, KC Professional reported sales of $767 million. That's a 10% drop compared to last year.
Wow, that's a pretty big drop. What's causing that decline?
The main reasons are selling off parts of the business and closing down others, as well as those currency swings we keep seeing.
Right, those seem to be coming up a lot this quarter. But if we take away those outside factors, how's the organic growth looking for this segment?
Organic sales for KC Professional also went down by 1% in Q3. The biggest reason is lower prices, and a lot of that has to do with those temporary energy surcharges they put in place in Western Europe last year. Those surcharges are gone now, which makes comparing this year to last year kind of tricky.
So they're up against those tough price comparisons, just like we saw with consumer tissue.
Exactly. But even with that pressure on prices, there are still some good things happening in this segment. For instance, volume grew at a solid high single-digit rate in developed markets.
So people in those markets are still buying a lot of KC Professional products. That's got to be a good sign, right?
It is. It tells us that the demand is still there. However, we're also seeing some weakness in certain channels and regions. In North America, for example, volume went down because there's less foot traffic in places like restaurants, stores, and hotels.
That makes sense. If people aren't eating out or traveling as much, businesses won't need as many of those away-from-home products.
Yeah, you got it. It definitely shows how the overall economy is doing. Now, what about the bottom line for KC Professional? How did operating profit hold up in Q3?
Yeah, tell me.
Well, operating profit for KC Professional was $161 million, a 4% drop compared to last year. Again, a big part of that drop is because they sold off their PPE business, but their actual operating profit benefited from productivity gains, which helped balance out some of that negative impact from lower volume.
So even though they're facing challenges, they're still managing costs well. That's a positive.
Definitely. And when we look at the year-to-date numbers, operating profit for KC Professional is actually up 4%.
Okay, so another case where the long-term picture looks a bit better than those Q3 numbers might suggest at first glance.
Exactly. They're operating in a tough and always changing environment, but they're making smart moves to set themselves up for growth in the future.
Well, that wraps up our look at Kimberly Clark's three main business segments. We've seen a mix of results, some good, some not so good, but there are definitely some positive things to take away.
I agree. The main thing I'm seeing here is strategic transformation. They're investing in their brands, they're squeezing more efficiency out of their operations, and they're adapting their organizational structure to a world that's changing really fast. It's quite a balancing act.
It's like they're trying to change the tires on a moving car.
That's a great way to put it. It takes skill and guts to pull that off. I'm really interested to see how they keep executing their plan and dealing with these challenges.
All right, now it's time to dig into the nitty-gritty of their financials. When we come back, we'll dive into Kimberly Clark's cash flow, balance sheet, and what they're predicting for the rest of the year. Stay with us. All right, welcome back to TalkTickers, everybody. We're in the home stretch of our deep dive into Kimberly Clark's Q3 2024 earnings call. We've covered their overall performance, that powering care strategy, and we even broke down those three main business segments. And now it's time to talk about the real core of any business cash flow and the balance sheet.
You know what? Cash flow is king. And Kimberly Clark's story here is actually pretty interesting. Through the first 9 months of the year, they've pulled in $2 billion in free cash flow.
That's a lot of dough.
It is. And it puts them a little ahead of where they were at this point last year, keeping them on track to beat their goal of $2 billion for the whole year.
So even with all the challenges we talked about, Kimberly Clark is still a cash-generating machine.
Yeah.
So what's making them so successful?
A big reason is they're laser focused on managing their working capital. They're doing a fantastic job handling their inventory, receivables, and payables. It's like they're fine-tuning a well-oiled machine to make sure every piece is working perfectly.
So they're really squeezing every bit of efficiency out of their operations. Okay, let's take a quick look at their balance sheet. Anything we should be worried about?
Not really. As of September 30th, their debt was about $7.5 billion, which is actually down from $8 billion at the end of last year. So they're actively paying down their debt, which is a good sign of financial discipline.
It's always good to see a company trying to reduce their debt, especially with the economy being what it is.
Absolutely. They've also got a healthy cash position with over $1 billion in cash and cash equivalents. This gives them some wiggle room to deal with any surprises that come up.
That financial safety net is super important these days. All right, so what about the future? Kimberly Clark updated their outlook for the rest of 2024. What are they saying?
Well, when it comes to sales, they've changed their expectations a bit. They're now predicting organic net sales growth to be between 3% and 4%. It's a little lower than what they thought before, mostly because of those ongoing retailer inventory adjustments we talked about.
So they're being realistic about the challenges in the short term, but what about profits?
Even though they're expecting a little less revenue, they're still thinking profit growth is going to be strong for the year. They're sticking with their previous prediction of mid to high teens growth for both adjusted operating profit and adjusted earnings per share.
So even with less money coming in, they're sure they can keep those profit margins healthy.
Exactly. They're relying on continued productivity improvements and keeping costs under control to balance out those sales headwinds and boost profitability. They're all about finding those efficiencies and making every dollar stretch as far as it can.
All right, so we've covered a ton of ground in this deep dive into Kimberly Clark's Q3 2024 earnings. Any last thoughts before we wrap up?
I think the big takeaway here is that Kimberly Clark is a company that's changing. They're dealing with some short-term obstacles, but they're also setting themselves up for success in the long run. They're investing in their brands, making their operations more efficient, and restructuring their organization to be quicker and more adaptable to this ever-changing global market. It'll be really interesting to see how all this plays out in the coming quarters and years.
I totally agree. Kimberly Clark is all about adapting, innovating, and being resilient. They're not afraid to make tough decisions, and they're committed to investing in their future. Whether it's developing new products, fine-tuning how they operate, or finding new ways to reach customers, Kimberly Clark is definitely a company to keep an eye on.
For sure. What they're doing gives us some great insights into the consumer goods industry as a whole, reflecting broader economic trends and how people are spending their money.
Couldn't have said it better myself. And that brings us to the end of another earnings call deep dive here on TalkTickers. A huge thanks to our expert for walking us through this financial maze.
It was my pleasure as always.
And of course, thanks to all of you for listening. We'll be back next week with another earnings call teardown. Until then, stay informed and keep those portfolios growing.